Anyone who believes in indefinite growth on a physically finite planet is either mad or an economist.
We don't want to focus politics on a notion that involves the rejection of principles around which a large majority of our fellow citizens organize their lives.
We are not as endlessly manipulable and as predictable as you would think.
My name is David Gann. I come from Imperial College and have been working on questions of innovation, new technology and how they affect the economy and society, and it's partly through those studies that we have been working together to look at the question of how money is changing and what's happening in the digital economy, which you'll hear about.
We believe that digital money is a truly transformative technology. We think that it will engage billions of more people in the global economy, and it will usher in a new era of more inclusive innovation that breaks down the digital divide between those who can and those who cannot access the digital economy. We start off by talking about innovation in services and arguing that it's actually very different from much of the way that innovation occurs in industry and much of the way we've come to understand innovation in the past. It's a different kind of innovation. It's not based on large research and development departments. You can't prototype products and test them in the market and so forth. And Irving will say more about this, but it's a much more personalized process. It's much more what is referred to as market-facing, and it's a much more collaborative process, innovating in services rather than in products. So we'll talk about that. Irving will talk more about that. Then we talk about inclusive innovation and digital technologies. Many people are aware of the concept of the bottom of the pyramid. Many large multinationals attracted, like Nestle, for example, attracted to selling small quantities at very low prices to large populations of poor people. But inclusive innovation is different. That's all about creating value for the companies. Inclusive innovation is about creating value for the people who are innovating, the people who are actually closest to the problems that they face in their communities. And in the pamphlet, we refer to some experiments happening around the world, particularly in Kenya, where some very interesting things going on. And in the pamphlet, we talk about how in these countries people are getting access to the technology for the very first time and how that is making such a difference. We then go on to talk about the case of digital money, where the real expert here is Tom Ashe is going to be talking more about it, and how digital money removes much of the friction that we have in the economic system in transactions. And there's been a massive increase in the use of mobile transactions. And I think one of the most stark statistics that I've come across in this whole question is that we have roughly 6 billion mobile phones in the world. 7 billion people, 6 billion mobile phones. But only 2 billion people have got bank accounts. So there's a large number of people who can't participate, haven't participated in that formal economy, who, if we can use banking on their mobile phone, will suddenly have access to the global financial system. This is all on the upside, but there are significant challenges confronting the use of digital money for citizens, for firms, for governments, for NGOs. And we talk about some of those issues related to security and identity. How do you establish trust in the system? How do you avoid state-sanctioned intrusion into privacy or criminal intrusion? And some of the experiments that are taking place in giving people personal identities, I think that Jerry will talk about that in India as a means of trying to add security. We're talking about an emergent technology, and all the studies of innovation and technological change show the incredibly unpredictable outcomes involved about radical innovations. And in the pamphlet, we talk about a couple of issues which will no doubt come up in discussion related to business models, how are businesses adapting to this new opportunity, what experiments are they undertaking, and how new collaborations are occurring, particularly interesting ones between public and private sector partners. And there are major challenges for governments in the regulations that they have and the standards that they help establish. There's huge benefits for government of digital money, huge opportunities for cost reduction and a greater range of service for a greater range of people. And the possibilities of open data particularly provide massive new opportunities. So we come to a conclusion in the report that we're reaching a tipping point with this technology where things can take off very, very rapidly. We don't predict which way it's going to go, but which technologies are going to be the actual winners, which platforms are going to be the winners. But we're pretty sure that something's going to happen pretty soon. It will involve a lot of new different kinds of partnerships between large R&D undertaking organizations, big companies, multinational companies, financial institutions, and a lot of local initiatives, a lot of very localized, bottom-up initiatives that are empowering people for the first time. We argue that digital money is a ticket to inclusion in the global economy, and it's fascinating to watch its future development.
Now, you can ask a question, but why really money is suitable for digitization? Why it should be digitized? I mean, if you think about what is who or what is the major competitor of digitization of money, it's actually cash. And when you look around the world, most of the economies still operate approximately 90% in cash. And even if you look at the developed economies, they would be doing 60% or 70% of commerce in form of cash. MasterCard did study that, first of all, cost of cash to the economy is between 0.7 and 1.4 of the GDP. So first of all, you might think handling cash is free. It's not. It costs. Secondly, handling cash, of course, is insecure. And in many of the developing markets, if you think about it, cash can mean threat to your life. And lastly, cash is inefficient. If you are in a small village and you want to maybe buy fish from other village, it's very difficult to perform such a transaction if you don't have a bank account with use of cash, because how can you send your cash to the village that's maybe 20 kilometers or 20 miles away from your village? And obviously, once you digitize the money, once they become electronic, distance disappears. And with the change of the world, with the world becoming more and more global, there is a need for connection and making money more ubiquitous, money to be available to be transferred from any location to any other location. So there is definitely a need for transformation. And last very important reason is that when you talk to many of the governments, actually they are looking for elimination of cash, because cash creates issues. I mean, there is a possibility to avoiding taxes, to doing things that are intransparent, to doing things that are just wrong. And as long as money is in form of cash, it's much easier to do money laundering, it's much easier for terrorist activity, and so on and so on. Once you introduce digital form of money, once it becomes traceable, it's much more difficult to perform this kind of transactions. So obviously governments around the world are also looking at the way to eliminate cash and replace it with digital forms of money. Now, what is the scale of digital money economy? It's huge. I mean, if you think about it, that most of the countries operate 90% of transactions in form of cash, think about what is the opportunity to replace it with digital money. It's just amazing. Also, the numbers that we heard earlier, right? I mean, you have 2 billion people that have bank accounts. You have basically more than 5 billion people who do not have a bank accounts, right? You have more people having mobile phones than have access to fresh water or have access to electricity, right? If you convert those mobile devices and you enable them to perform financial transactions, suddenly these people will just have a very different possibilities. And also I must tell you that we saw amazing, I would say, synergetic side effects of introducing digital money. In some of the countries where we introduced mobile payments, individuals that were running stores, when they wanted to apply for a loan, they would go to a bank and they would take a copybook with written orders and sales in the store and show it to the bank and saying, this is book where I have records of all my performance of my store, I would like to get a loan. And obviously bank would say, well, how do I know that this is really true? How do I know that this reflects your real transactions? But the moment they started actually to accept and perform mobile transactions, they started to have electronic record of their transactions, or at least part of the transactions in the store, they were able to present it and basically get a loan. So you get those synergetic positive effects of the introduction of digital money, and digitizing the money. And secondly, I wanted also to tell you about the scale. I read the report from GSMA, who is Association of Mobile Network Operators, and in June of last year, there were 150 mobile money deployments in the world. So there was already 150 deployments in the world, and actually there is more than 40 countries that have more than one deployment of mobile money. So I don't think we are anymore talking about future. I think we are, right now, this conversation is about what's happening. Of course, there's more to come, but definitely digitization of the economy and digitization of money is happening across the globe.
When we think of mobile business, we tend to think of communication, we think of technology platforms, and we think of services on top of those platforms. What we miss in much of this discussion is what the core user need is, because we tend to take a model that works in our world and somehow try to expand that model or that platform into a different environment. So some companies have been successful in modifying the transition, while others have not been. So now you think of core needs and then say, what does our research tell us about what needs are? If you think of needs itself, there are three basic needs that come about in social inclusion. The first one is a sense of identity. If you think of, I'm not sure if many of you may have heard of it, something called the looking glass effect or the looking glass. So this is some psychology research early on saying that people create a sense of identity of who they are is based on how others see them. So I am reflected in how each one of you see me. But that sense of identity, it is embedded in your community. And to change that and take it elsewhere, you have to have the ability to then say, and I'm not sure how many of you are movie buffs, but create a number in a sense that we all have social security numbers, national insurance numbers, and so forth. But to know who you are and have an affiliation that allows you to transport that identity from one context to the other is the basis of social mobility. And so that's the first step in this sense of what our consumer needs are. The second one is in terms of facility. What are the services that I can get? Things that make my life easier. And in this, we've got mobile money, we've got lots of these services, advertising and so forth. All these are paying bills, transferring money from my phone to somebody else's phone for any transaction, or helping out a brother who lives in the village, or anything like that. That's a sense of facility. And the third one is a sense of connectedness. The sense of connectedness is the one that allows me to have mobility. For me to improve my context, my own self, would be based on how well connected I am, whether I can immigrate from, whether it's a village, inward immigration, or outside, whether it's just labor movement in terms of skills. So usually we think of movement of who I am. I can go from my village to the other, and that would somehow, I can make it happen. But that's not true, because unskilled labor is much more difficult to identify what your skills are, even when we classify them as unskilled or manual labor. So having that sense of connectedness, the ability to transfer that and show a proof of who you are, your existence, becomes fundamental to this whole process. So in India, 2009, the government of India started the Aadhaar project, or the Unique Identification Project, 2009. 3-4 years out, the Indian government has, if you know the Indian population, it's about 1.2 billion, slightly give or take 100 million, few hundred million. And what it does is the project now has identified 300 million people within 3-4 years in terms of from scratch, setting up infrastructure to give identification. And what that identification is it has information on biometrics, it gives you a number, it gives you some location data, and it gives you some kind of lineage social data. So what that allows you to do then is create platforms of services and everything on top of it, whether it's banking, whether it's the one big thing that the Indian government is doing, what is called the direct cash transfers, where social welfare payments are made directly to you based on your unique identification. So in terms of just thinking about having an identity allows you to do direct cash transfers in a context which was impossible to do before. The main problem is not access. It's also changing behaviors and how people sign up. There is a lot of rhetoric of everybody can sign up using digital mobile and it's automatic that you can use it. But the truth is that only if you look at, I think, West Africa, only 5% of people who actually have access and sign up use it. In East Africa, it's 15%. In South Asia, it's about 20%. The most usage comes from Pacific or East Asia. So in other words, even if you have access, it does not necessarily mean they'll use it. And there are other sort of nuances that go with it. So I'm going to stop here, but the idea of saying, if we think of digital money and the opportunities that come from it, we have to revert back and say, what does it mean for social inclusion, whether it's in the UK or Africa or India or China, wherever it is in the world? The sense of identity, this sense of facility, how does it change my life and transform or make it easier, and the sense of connectedness. And at all of this, the center is, what do people actually need? Thank you.
Thank you, Jerry. Thank you, all of you. We've got some insights from Jerry on the activities in China and India, but what about running businesses in London? Can you just give us a feel for where you think the friction might be removed, one of you, so that we get a bit of reality into what might be happening here?
Let me go to the short distant future and say how the world is evolving and how exactly what frictions will be evolved. When you talk today to the producers of the various machines, whether these are cars, whether these are refrigerators, whether these are printers, any machines that you have in your houses, actually those producers are already connecting all of those devices to the network. So first of all, every device that we have at home very shortly will be connected to the network. Also, when you talk to mobile network operators, they expect that already by 2015, the number of connections of machine to machine will exceed number of connections of person to person. So actually, it will become more important for them to manage all of the connections between the machines. So the question is, what does it mean? It means that lots of activity, lots of commerce will shift, and lots of services purchase will shift from the traditional models to the ones where delivery of that product or order of that service is done by a machine or done through a machine. So let me give you a few examples that are already available. If you buy upper level BMW, you have embedded concierge service in your car. So basically, as you are driving from one city to another city, you can actually request hotel reservation where you can provide the guidelines that you want a 4-star hotel in this specific town and you would like it to be within certain price range. And you will get offers back saying these are 3 hotels, these are your options, which one do you want to book? And then you will choose one of the options. And now for you, as you are driving to conclude that booking, you will need integrated form of money. You cannot say, I'll pay as I get there because hotel wants to have a booking. As you are driving, it's not convenient to pull out your credit card and say, okay, let me read it to you, and that's dangerous, right? All of that will have to be integrated with your car. Then there are already refrigerators being produced that recognize shapes, and you can say, why the hell my refrigerator should recognize shapes? So it can order goods for you. Meaning when you're running low on milk or eggs, it can basically send you a text message saying, hey, you have 1 egg left only, and generally, for a breakfast, 4 disappear, you might want to order this. Do you want me to order eggs for you online, right? And it sounds very sophisticated, but actually producers are already working on this type of devices. So all of that traditional form of commerce will change, and all of the digital form of money will have to be embedded in this type of machines to be able to conclude all of those services. And this is where the world is going, and these are the solutions that we are worked out on today.
David, I think the business benefits are different in different segments of society. I think that for most of us in economies where we already have credit and debit cards, it's easy for us to view digital money as sort of not a big deal because we already live very digital existences. Now, in my case, for example, I had to remember to bring my Oyster card and not confuse it with my Metro card for New York City, or the one for DC, or here is one for Chicago. And boy, if not long from now, they can all be in my digital wallet, that will make it easier. And by the way, you can buy a latte in Starbucks easily also. But let's say that's not that huge a deal. It's a much bigger deal if you don't have a banking relationship, and if you are, as a result of that, you have to transact in cash. You have to spend, not only do you not have a lot of money, but you have to spend a lot of your time in queues, paying for things, cashing checks. You have to normally pay huge fees. Here we have all these capabilities because we're in the digital economy, from getting a great deal on Amazon to other things like that. And if you're in a cash world, you are not in great shape. And that's why we are all so excited about including a few more billion people into the cash economy. And what this McKinsey study, and there were also some studies by the National Intelligence Council in the US, the intelligence community does things other than listen to phones. They do studies about all kinds of things. And one of their biggest mega trends in the world was the empowerment of individuals. And all of a sudden, these people have become consumers. That is, they have a bit more money than just what they need for basic needs. And David, I think that will have a profound impact on both local businesses and global businesses. Mm-hmm. That's why I think this is so transformative.